Do you want to pay less in taxes? How about pay zero in taxes? Is there a way to plan tax strategy versus just preparing those taxes? I'm here to answer those questions. Well, actually, not me. Like the Grandmaster, the Master Blaster from Lancaster, except he's from Corona Del Mar, Newport Beach. He's here and he teaches entrepreneurs how to save money on their taxes legally. Welcome to the Jasmine Star Show, Karlton Dennis.
Oh my goodness, thank you so much. That was one of the strongest intros I think I've ever had for a show.
I'm going to make you take it back right now. You want to know why?
Oh, what?
Okay, because we're gonna play a game.
Oh, let's do it.
I told you. I said you're ready for everything.
I'm ready.
So I'm not going to tell you anything. So what I'm going to do,
Let's do this.
is I'm going to play a game, and I'm going to set a timer. Are you ready?
Okay.
Ah!
Here we go.
Okay. So I'm going to set a 60-second timer. And
Okay.
so welcome to the show. Welcome to the show. We're going to hit the ground running. Here it is. 6 tax loopholes in 60 seconds. Are you ready to play?
Oh, okay. Here we go.
Okay, here we go. 1, true or false? You can write off your dog if they appear in your content.
No, that's not true.
2, can you write off clothes for a brand photo shoot? Yes or no?
Yes, if this is a part of your outfit or costume.
3, what's your favorite write-off that feels scandalous but totally legal?
The Augusta rule where you're renting your house to your business.
4, yes or no? Business owners who make content for YouTube can write off their haircuts and manicures.
Not necessarily. It needs to be a part of your brand.
5, can you write off a vacation if you film content while you're there?
Yes, but it needs to be business intent first. It cannot be labeled as a vacation.
6, what's the most surprising thing people didn't know that they could write off?
Most people are unaware that they can place their children on payroll. You can place your children on payroll if they're doing legitimate work underneath the age of 18 without them needing to file a tax return.
Last 10 seconds. This is a bonus one. If the IRS had a theme song, what would it be?
Born in the USA.
You did it! 4 seconds. I told you were going to take it back. That was so good. That was so good.
Awesome.
Karlton Dennis. Okay, y'all, I have to tell you. I have been creeping. I know. Did I make you sweat? I was like, turn the air conditioner.
On it like this. I felt like I was in an audit for a second. Oh my gosh. Hit me on the spot.
Okay. Here's the thing. I have done so much creeping research on Karlton. Before the cameras came on, I told him, I was like, I am not your typical podcast guest. I don't know much about taxes. I want to know the differences definitely between preparation and strategy. That is why you're here on the show.
Let's do it.
After that beginning part, everything else is going to be super easy.
You're amazing.
Okay.
Let's do it.
We started off and we had a lot of fun there, but I usually don't start the show with a little bit of backstory or origin, but I think it makes a lot of sense and eases in on how we framework what this conversation will be about. So can you give us how you got to where you are today and what it is that you do?
Yeah. So I started working out in my mother's company right when I graduated college. What I realized in her company is most people don't pay my mom just to file a tax return. They were paying my mom to think of ways to reduce their tax bill.
Right.
It was a completely different business model to a normal CPA firm where you're trying to build up a book of business of all these clients to try to file a return. She was building up a book of business of clients who she can save money on taxes for. And so once I learned tax strategy inside of her business, I knew that I needed to take this information to the world. But my mom at the current time wasn't focused on content or social media. So I decided to start a YouTube channel back in 2019. And I put out videos around LLCs and S-corps and placing children on payroll. And right when COVID happened, my YouTube channel took off and we grew Tax Alchemy in my now business, which we help small-based entrepreneurs leverage the tax code to the fullest extent.
Okay. So talk to me though, how did you start working with your mom?
Yeah. So it's kind of funny. I actually went to school to play football. And after I found out that the NFL doesn't really take a whole lot of people that are 5'9", 5'10" for the cornerback position, reality started to set in. I got a job working for Gallo Wine Company first, and then I started doing modeling and fitness training part-time. Turns out that when you make 1099 income, you're supposed to report all of it to the IRS when you file your tax returns. So I got a letter in the mail telling me that I owed more money to the IRS than I had in my bank account. Should have called my mom, should have set up an LLC. But of course, just being a young kid, just was doing things by the fly of the whim. Called my mom up. She got pretty pissed off. And she said, listen, we're going to get you on a payment plan. And if you want, you can come start a sales division inside of my office. So I said, okay, well, I'm already in a sales job here working for Gallo. Why don't I come over to the family business and build out a sales division with you? And that's what happened. Early on, I'll be honest with you, I didn't make a whole lot of money because I was more focused on fitness and eating. But after about 2 months into it, I saw my mom, onboard these customers. And she brought in over $100,000 worth of revenue that day just for selling tax plans. I was writing workout programs for $100 a month, and my mom was bringing in $100,000 a day. Right then and there, I realized, what I thought I wanted for my life was not matching up to the types of income or goals that I was seeking in the fitness space. So that's when I started to go all in on tax.
And you started off with sales, though.
Yes, sales is my background.
Okay, so you're selling on behalf of your mother's business?
Yes.
And so then what happens? Now, I know that you brought in, you recruited a friend.
Yes, I did.
Okay, talk to me about that.
So I brought in one of my friends from college. Him and I were working at Gallo Wine Company together, and both of us were kind of getting to a point where okay, we need to figure out where we're going to go to make commission, because Gallo was not a non-commission based sales job. Didn't matter how hard you worked, you weren't going to make any more money than your salary was. So my mom allowed for us to create our own commission-based structure. It's pretty awesome. So we made it a very tiny salary and a massive commission side of it. But when we got into her company, I'll be honest with you, we didn't make a whole lot of commission because we didn't understand anything about taxes.
Okay.
So she made us sit down and listen to her one day, and that day changed everything. When I saw her onboard customers and bill them for $20K, $30K, I started to see, wow, she has a superpower in her languaging and in her understanding of tax. But these are only 25 and 30-minute conversations that she's having. She's not, talking to these people for multiple hours. And to me, that was just so powerful to see someone communicate how they can help somebody over 20 to 30 minutes and be able to build them and the customer understand the value.
Okay, so I just want to take a quick second and put context into why Karlton's here. Karlton's here, and he's talking about his mom, and he's talking about what he's doing because people are paying him a lot of money. But it's his knowledge, his insight, and how he saves business owners, specifically entrepreneurs and people, well-to-do folk, how to legally save on taxes.
Yes.
You're an entrepreneur and you are watching and you're listening right now. He's going to come in and he's going to be sharing his insights on what he's doing to prepare you for that. And I was first a student and now I get to be an interviewer. And one of the things that I thought was really compelling is that you're this really cool combination where you can create content. You've created a very successful business and you're also a business owner. So you're seeing things from 3 different perspectives.
Yes.
And so I liked how a lot of the times you explain theory with story.
Yes.
And so I just pulled out a couple of the stories. And so I'm going to talk where a major weakness for me was you're going to think it's really basic. But I'm going to ask this question and I'm going to start here because I need help.
Yeah, of course.
Okay. So you say as entrepreneurs, we should be logging all of our receipts.
Yes, absolutely.
And you said it's never been easier to log your receipts. You just take a picture of your receipt and then maybe write a note who you're dining with.
Yes, absolutely.
That's physically impossible for me. It's I take photos of everything all the ways. And so how am I going to be cataloging my receipts?
Yes.
And tell me the system.
Yeah, absolutely. So the reason why I am a stickler on receipts is because when most business owners get into trouble with the IRS, it's in an audit where they can't prove why they had the expense.
Yeah.
When you're looking at your bank statements and you went to Staples or you went to Home Depot, it may say that you spent $1,000 at Staples or you spent $1,000 at Home Depot on your bank statement, but it doesn't tell me what the actual expense was.
Right.
So now you're having to describe to me what the expense was. Imagine if you're describing expense after expense after expense and you have hundreds and thousands of transactions in a year.
Yeah.
This becomes a fight with the IRS on what expenses that they're going to allow for you to take if you don't have proper documentation, because they want to see what is the actual expense that you spent your money on. Was $500 at Staples for you to buy personal items for your at-home computer system, or was that for your business because you didn't keep any of your receipts and IRS requires that you keep your receipts? Yes. So this is why you need to take pictures of it. So the system is take a photo of your receipt with your iPhone. You can do one or two things. If you're at the level where you already have accounting software, great. You can go ahead and send this to your assistant or go ahead and send it and upload it directly to QuickBooks. QuickBooks will categorize the receipt with the transaction. Any transaction that's over $75 needs to be saved. Any transaction that's under $75 is considered de minimis, so you don't have to save those receipts. But if you're making transactions over $75, let's go ahead and take a snippet of it, upload it to QuickBooks. Let's say we don't have QuickBooks. Well, then I want you to go ahead and take a photo of it and upload it to your iCloud notes section. As soon as you send it in a text message to your iCloud notes section, it pops open. What is this note for? And write a brief description of why you took that expense. If it happens to be a meal, write down who you were with. So the IRS, if you're ever audited, will be able to justify that that business meal had a business intent.
Okay, that's it. That was the thing. That was the missing piece for me because I'm like, you said to take a photo.
Yeah.
And then I'm like, it's just going to sit there in there. And so now I know to text it to my notes account and then explain, okay, see, that's what it is.
Yeah.
So,
and receipts get lost. We had a client one time who had a hurricane happen in their property in Florida. All of their tax documents going back to 2013 got lost. They got audited over the course of 4 years. IRS did not care that they did not have their tax documents and receipts. So then they had to go into an offer and compromise with the IRS where they had to offer a reduced amount and compromise, hopefully, with the IRS to be able to pay off their tax balance. That was a horrible situation. And ever since then, I knew that it was important to have digital copies of your receipts, not just physical copies of your receipts.
I felt like one of the things I was scared about having this conversation with you is like, when you become aware of something and then it's going to happen. Yeah. I felt like by me inviting on my podcast, I was like, I'm going to get audited. Like, I'm going to get audited. It's like, I know. I don't even want to see it. But I'm like, you know what? Like, listen. I'm going to come in and I'm going to be prepared. And I'm going to hope that if I do, like, my lips to God's ears, I hope not. If I do get audited, it would just be like 5 years from now. Because I'm going to get my books. I know that heavy sigh. I know, Karlton.
Yes.
I know. I mean, I feel like I'm mostly organized, but we have a bookkeeper.
Yeah.
And so I'm like, am I just going to be uploading these receipts to the bookkeeper?
Absolutely you are.
Oh, really?
Yeah. Me, my bookkeeper, and my wife have a text thread.
What?
That bookkeeper gets text messaged every day. Me and my wife just left RH and just had dinner.
Say less.
We just left, Ocean 48. Here's the receipt. Oh, 150%. Yes. Whole system in place.
And okay, wow, this is not in my notes. Wait, I feel like I'm shook right now. Yeah. And your bookkeeper's okay with that?
100%.
And are you paying extra for that?
Yes.
See?
Receipt logging is a part of her job every single month is to log my receipts.
Good.
I'm not going to do it.
Okay, see, and I was like, I can kind of get behind the text message to the iCloud.
Yeah.
But that wasn't really me.
But then who's going to go categorize
That's what I'm saying.
Yeah,
so,
bookkeeper.
Oh, okay.
Yes.
And on that note, see, the video crews look at me like, So Saturday, one of our content creators and I are going to a conference. And so we're going to go out to dinner after.
Yes.
Watch me take my receipt and say, me and Aisha creating content.
100%.
Watch me. That's right. And then I'm going to text it after I get the cosign from my bookkeeper and say, charge me more.
Yes.
Because I'm going to send you texting.
And because Uber, if you tap into take an Uber, also sends you an email, you can set in your email to forward all receipts from Uber to your bookkeeper.
I mean, see, here's the thing. People are going to come across this video and they're going to look at me and be like, girl, you are so simple. And guess what? That's right. Okay, I'll be simple and rich. Okay, so what's one tax move millionaires make that beginners miss?
One tax move that millionaires make that beginners miss.
Or how about this? Oh, no, go ahead. Go ahead.
Millionaires have the ability to take loans from their own businesses. When you get to a certain status, you'll switch your businesses to C corporations. When you get to a big enough status, you'll move away from the S-corp, which is awesome. And
so what's big enough?
Big enough is like 10 million.
Okay.
I was like, when you get up to like 10 million, yeah, you're probably going to be in a C corporation.
Okay.
Then you start issuing yourself stock, and then you could just take loans against your own stock. It's non-taxable. It's non-taxable money. So you take money out of your own corporation. C corps are taxed at 21% flat tax rate, right? It only could be so much you could do to keep drawing down your tax until eventually you want to shift out of an S corporation into a C corporation. That has a flat 21% tax rate. But then if you take money out of a C corporation to pay yourself, you're going to pay taxes on the salary that you give yourself. So now you have this like double taxation that most people hate with C corps. But what most people don't know is that large corporations like Tesla and Amazon, they operate like C corporations, but you can operate like a C corporation too and take loans against your own stock in your own corporation. That's been issued to you. Pretty awesome.
That's good.
Pretty awesome. Yeah. So I would say like that's like a big millionaire hack. And there's definitely a lot more that we can cover.
Okay. So talk to me about the story about the gentleman who came in and your mom was supposed to meet with him. Yeah. And
yes, I'll never forget that.
Okay, because it had an impact on me. And that's why I asked this question of like, what's the move that they make? But it was beyond that. So let's go there.
Yeah. So I met with this guy. His name was Carl. I'll never forget because my name is Karlton. You don't forget that. Carls and Karltons always remember each other. That being said, right? How many Karltons do you run into? You'll probably run into
Karlton with the K. That's swag.
You might run into like 5 Karltons in your lifetime. You'll remember those Karltons, by the way. You're like, oh, that's a distinct name. Okay. So this guy's name was Carl. He was older. And when I say older, I'm talking to like in his mid 80s older. Okay. Like you are making it into an office today, sir. Okay. You're moving well. And he had his wife with him. They were dressed so nice. They looked like the king and queen of England, like in very, very pristine clothes, very nice earrings. They came in to meet with my mother. My mother had to leave for an emergency. That meant that her calendar fell into my lap. I had to do all the in-person meetings for her that day. This customer came in explicitly to get his returns reviewed to figure out where he could reduce his tax bill. At that current moment in time, I did not have a tax license. I had a sales background and I was selling tax plans, but I never had to meet with clients or figure out ways to help them. He came into the conference room with all of his documents.
Wait, pause.
Yes.
There is a difference between tax planning and tax strategy.
Yes. Or tax preparation.
Okay. Can you explain that before you get into this story? Because that was really helpful for me to understand when I started doing work around you.
Yeah, absolutely. So tax preparation is the process of collecting all of your documents and inputting it into the tax software to keep you in compliance. Every single person who makes over $15,750 has to file a return. So that's tax compliance. Most CPAs, certified public accountants, are perfect to go to get your returns filed into accounting. Enrolled agents are what my background is now. We do tax strategy. So when it comes to consulting with you on ways to help you reduce your tax bill, we are working in the down months of tax season, normally June, July, August, September, October, November, to try to figure out how to reduce your tax bill before you come into tax preparation season. This guy was coming in during those down months in July looking for tax strategy.
Okay.
And he wanted to speak to my mother and she wasn't there. So now it fell to me and I was like, uh-oh, here we go. But I was prepared because I had sales knowledge. I knew how to sell people on working with my mom in the company. Here's what happened. He sat down across from me and he went on to explain to me that he had multiple different businesses and he had been working with tons of CPAs and he was so elated about my mom because she spoke tax strategy and she gets it and understands depreciation. He was so excited to be there. I said, awesome. Well, let me explain how tax planning works. And I went through my elaborate pitch and I hadn't touched his tax returns yet. He's like, oh, this is amazing. He's like, yeah, man, you see my returns right there. Just let me know what you're capable of doing. And I opened up his returns and blam, right there, front page, 100 million in revenue. Whoa. Someone 85 years old is pulling in to this day active revenue of over $100 million. I've never seen this before ever on a tax return. And I start flipping and I just see companies that he owns. He owns a meat company. He owns distribution companies. He owns farmlands and wildlife. And then he also owns tons and tons and tons and tons of investment properties. He owns so many investment properties. If I grabbed a stack of the pages and I just started flicking through it and it was all the same type of schedule of real estate. It was just tons and tons and tons and tons and tons of investment properties. If I had the knowledge that I had today, it would have probably taken me an hour and a half just to go through those returns to prep for the call. I closed the manila folder and I said, so this is what we're capable of doing for you. And I went through my pitch again and he stopped me and he said, it looks like you don't know how you can help me right now on my returns that you have in front of you. Can you? I said, sir, listen, this is something normally that's reserved for my mother and the other tax pros. I'm here to just tell you how you can work with us. And he paused right there and got up. Him and his wife stood up and said, listen, let your mother know this was great, but I'll be back when she's ready to meet with me. Have a good day. And he walked out. Now, Jasmine, I work out a lot. All of my testosterone in my body felt like it left me right then and there. I felt like a little dog with a tail tucked between his legs. And I'll be honest with you, I was super embarrassed to the point where I didn't even want to tell my mom. Like, I didn't even want her to know how that meeting went. I went onto my computer later that day and I was like, okay, how do I become a tax strategist or get the highest license in tax, strictly tax? That's what I need to be. And it wasn't the CPA license. It was the enrolled agent's license, the highest designation the IRS gives out for tax. You are proficient in tax strategy, representation, and most importantly, you can represent people in all 50 states. I didn't have to worry about whether or not I was talking to California clients or Florida clients. So I spent 6 months and got that license. And after, I felt like I had superpowers. Like I got hit by a bus and woke up the next day with the superpowers. Like I could see through the matrix of tax. Now I wanted to talk to people. I want to talk to the most wealthiest of people because I knew I could do a lot for them based off of my knowledge now. Now I can kind of see what's happening and I knew how to communicate it.
So who's your ideal client? Like when is somebody reaching out to you?
I would say someone who's reaching out to me is making over $500,000 a year. Yeah. And I would say we cap out right around like 100 million.
Okay.
Yeah.
And so this is making $500,000 a year as their personal take home?
Yeah, it's personal take home.
Got it.
Mhm.
Okay. And so what is the majority of the people who are doing that? Entrepreneurs?
Yeah, I would say majority are entrepreneurs, high W-2 taxpayers that are working in corporate companies, maybe getting issued stock options. We work with a lot of people that are doctors and physicians. Doctors and physicians make a ton of money W-2, and surgeons make a lot of money W-2 as well.
And so what are the common opportunities that you see? Somebody comes to you. What are the maybe 2 or 3 common opportunities immediately when you get a new client?
Yeah, when I get a new client, what they normally tell me is my CPA has already told me I maxed out all of my deductions. And I'm like, okay, but have you maxed out all of your investments? And this gets them to kind of think back. And they're like, hold on a second, what do you mean max out my investments? And I'm like, we can strategically invest money to help you offset your tax bill, even though you may have maxed out your 401k or your average deductions that you're able to claim. And for somebody that's maybe a W-2 taxpayer or a business owner that's just getting into profitability, we might look at doing a short-term rental strategy. This is one of the ways in which we can get them to have a active business on the tax returns, but also be able to use the tax code to accelerate depreciation on the investment property, which can offset W-2 or even 1099 income. It creates a loss on the tax return that the taxpayer gets to experience.
Can you explain a little bit more into that? Because it was after listening to your content that a big move for me in 2026 is to get our first rental property because of the stuff that I've been learning. Can you break it down for people and get them inspired the way that I've been inspired?
Yeah, absolutely. So the IRS created a rule in 1976 that said there is now non-passive income and passive income. Before 1976, we just had income. So if you invested in a rental property, it was just income. If you worked a W-2 job, it was just income. If you had a business, it was just income. After 1976, we had the Tax Reform Act, and Ronald Reagan changed everything. And he said, hold on a second. If you're investing in real estate, this is kind of passive. You just collect a check. So we're going to call it passive income. And if you're working a W-2 job or you're showing up to a business, we're going to call it non-passive income. And if you have any deductions or losses from something that's on the passive side, it shouldn't be able to offset the active side. Well, this is an issue for all of us that want to invest in real estate to offset our active forms of income. We would actually probably never be able to offset our active forms of income by just investing in real estate. So the IRS gave us ways around these rules that Ronald Reagan put into place in 1976. And one of the ways around his whole passive activity loss rules is by becoming a real estate professional. A real estate professional is someone who can show the IRS they're spending 750 hours in the year managing their own investment property, or they can show that they're spending more time in real estate than any other thing. Well, if I'm spending 750 hours in the year managing my own investments, and I have to spend more time in real estate than any other job that I have, W-2 job or 1099 job, I'm essentially doing real estate full time. For most people, they can't justify being a real estate professional because they don't have time to be a real estate professional. If you work 40 hours a week for Tesla, you would have to spend 41 hours a week managing your real estate portfolio. That's 81 hours a week of work just to get some tax deductions. No one can do that. So this is why I introduced the short-term rental strategy back in 2020 after doing more research inside of the tax code. When I sat there in COVID and I was thinking, how did Ronald Reagan think about Airbnb and VRBO when he didn't have Airbnb and VRBO back in 1976? And it hit me like a bag of bricks. Sorry, 1986. And it hit me like a bag of bricks. This was a hotel motel business for Ronald Reagan and all of taxpayers back then. Being able to rent out a house was very similar to being in a hotel or motel. A hotel or motel is an active business in the eyes of the IRS if customers are coming in 7 days or less on average. So most people who are running an Airbnb are having people coming in 7 days or less. If you can abide by this rule, 7 days or less on average, and make sure that you're managing your Airbnb for 100 hours in the year, you have an active business in the eyes of the IRS. So now we can take an active loss from your Airbnb by accelerating depreciation to offset your active W-2 or S-corp or LLC income. This is where depreciation starts to become so important. People understand the word depreciation, but they don't know how to leverage depreciation. Depreciation is just what you're thinking. When you drive a car off a lot, it goes down in value. But the same thing exists for investment real estate. It's sitting outside in the rain, the sleet, the snow. So it's technically losing value structure-wise, even though it may go up over time because you bought the right property in the right location. The government gives you a write-off as your property depreciates. It gives you a write-off for the whole building's value. The whole building's value, you get to write it off on your tax returns. The sad part is it's over 27 and a half years. So most people are like, okay, great. I'm writing off my whole building over 27 and a half years, but this is a really long time. Is there any way I can speed this up? This is where we enter the cost segregation study as a strategy for those short-term real estate investors. If you do a cost segregation study, what someone is doing is getting the cost of all of the non-structural components that make up your property, such as like the appliances, the windows, the flooring. These non-structural components, the IRS says you can write them off in 1 year or 7 years or 15 years as opposed to 27 and a half years. So by extracting 30 to 40% of your building's value and accelerating the depreciation, you're creating such a massive loss that flows on your tax return. That's an active loss that can offset active forms of income. That's pretty awesome.
How many, do you mind, can I ask you a personal question?
Of course.
Do you have rental properties?
Yes.
And how many what's your goal? How many do you have? What do you want? What
I
do you
have
see as most beneficial?
17 properties right now and close to about 28 doors between those properties. I think my goal is to probably get to 1,000 doors.
Wow.
Yeah.
And do you have a strategy on how you're going to get there?
I'm just going multifamily right now. I've just been acquiring multifamily apartment complexes.
Wow.
Yeah.
Oh, that's an entirely different episode. I'd love to hear more about that. Okay. So there was one thing, my husband and I are thinking about getting a new car. And I've heard you talk about writing off 100% of a 6,000 pound car. And other years you're only writing off 60%. Can you explain that, like how that works and what I should be looking for?
Yeah, absolutely. So last year we were able to take 60% bonus depreciation on vehicles. And the reason why is because we didn't have Donald Trump's big, beautiful bill that got signed into law July 4th, which is pretty awesome. Now we have 100% bonus depreciation. But what does that mean? What it means is the tax code works in favor of people who are buying vehicles who are business owners that weigh over a certain amount of pounds.
Okay.
The tax code is incentivizing you to buy vehicles that weigh over 6,000 pounds. And for most taxpayers, if you find a vehicle that you like and purchase it, you're most likely going to purchase it with OPM, other people's money. So the benefit of you buying a vehicle and using 100% bonus depreciation is you're arbitraging debt to save money. If I am going to go buy a $100,000 F-150, I could put a $5,000 down payment down. If I'm in the 37% tax bracket and I write off $100,000 on my tax returns, 100,000 times 37%, that's $37,000. I put $5,000 down to get $37,000 worth of $37,000 worth of savings. I'm arbitraging and I'm saving $32,000 right then and there by using the tax code bonus depreciation to buy that vehicle and placing inside of my business. But here's the one thing I want to make sure everyone knows, Jasmine. Most business owners aren't using vehicles 100% for business. I would argue that most are probably using vehicles about 80% for business. So before you go rush off to buy that car, make sure you calculate based off of how much depreciation you're going to take. What does that look like for your tax savings?
That's good. And I had heard that you had mentioned an app that you could use to track mileage. Do you remember what that is?
Yeah, absolutely. So QuickBooks allows for you to track mileage as well. And then there's an app called Mile IQ that will also track your miles as well. So you can write off your vehicle claiming mileage, or you can write off your vehicle claiming actual expenses. Actual expenses are the things that you actually spend your money on: gas, tires, cars, car washes. Or mileage means that I'm just going to write off 70 cents per every single mile that I drive in the year. IRS only allows for you to choose one or the other. You can't write off both.
Okay. See, this is the good stuff. This is weird stuff. Okay. Yeah. In that Q&A, the flash fire, the game in the beginning, we talked about haircuts and manicures. And then there was like the caveat, if it's for your brand. That seems pretty like vague.
Yeah, it is.
Can you describe that?
Yeah. So there's IRS court cases that have not sided in the favor of taxpayers who have tried to write off haircuts and Rolexes and watches.
I didn't say a Rolex. I'm just trying to get my manicures. I'm trying to get my manicures as a write-off.
I'm glad you didn't think through the Rolex, because that one's a real tough argument. And then there's taxpayers who have been able to do that. And it's based off of facts and circumstances.
Okay.
Because each person's situation is different. For people like me and you, Jasmine, we're on camera every single day sometimes. So it makes 100% sense that our appearance needs to be on point in order for us to generate revenue. And it's an ordinary expense for us to be able to have a haircut because we're on camera every single day.
Amen. Yes. Yes.
We are
Watch me rip my hair off.
we are entertainers. We are entertainers by trade, and as entertainers by trade, we have to wear a costume. We have to have camera equipment. We have to show up and have makeup. This is a part of how we perform.
Mm.
I wouldn't imagine why I wouldn't be able to write off my haircut if I'm performing in this capacity every single day, or it's a part of how I generate revenue.
And just as a side note, just in case I ever get audited, I make sure that when I do iPhone content, I'm including my hands in it.
Oh, good.
I am. Like, I'm just being, look at how I'm pointing at this. If they're like, how could you use it? I will send you 374 short form content of my nails. Okay, that's super helpful and very good to know.
Yes.
Now, I want to know, on that note, because you said we were not going to write off a rollie.
Yeah.
Now we can talk about situations in which that might be the case, but you did work with a client where she wrote off her yacht.
Yes, I did.
Okay, so let's talk about that.
Yacht's different than a rollie because a yacht is a vehicle. A yacht's a vehicle.
Oh, okay. Oh my God. Okay, Levy. Like, is my husband watching this?
Yacht.
Buy me a vehicle, baby. Buy me a vehicle.
Yacht was categorized as a vehicle, and she leased the vehicle to her corporation, and she was able to deduct the vehicle as a vessel. So yes, we were able to write off the yacht, and we won that audit.
Okay, but tell the story about the audit.
Okay,
that's
so
super
this woman came into our office. My mom was there for this one, and we sat in the conference room. Cool thing is we went into this like not knowing who this woman was. She was very anonymous on the phone before coming into the office. She didn't really want us to know a whole lot of details about her. And when she came into the office, she was wearing this full Louis Vuitton dress. And then she had her Louis Vuitton purse that matched her Louis Vuitton dress. So she was just like dolled up. And she was kind of frustrated. She had her tax documents with her, and she said, hey, I have already met with 14 other CPAs. Let's see what you guys can do. And slid her manila folder across our conference room table. And it fell into my lap. So I opened it up. There's 2 returns, one for me and one for my mom. So I gave one to my mom. And I looked at her tax returns, and it was already marked up by other tax accountants. Like, she'd given us returns that she had brought to other people. Here's what I noticed. Right when I opened up the returns, I noticed that she was making a couple of $1 million. But then I saw on the very next page that she had a notice from the IRS that said, judgment $1.1 million. And I was like, whoa, she needs to pay the IRS $1.1 million in 3 weeks. So we immediately opened up and said, hey, why is the IRS assessing you? And how can we help you? She said, listen, I purchased a vehicle. I went to other CPAs. They told me it wasn't a vehicle that should be placed on my tax returns. And now I have nobody to support me with this. I believe this vehicle is a business expense for me, and I need support on it. And we said, what's the vehicle? And she said, it's a yacht. And I said, I took a big gulp, and I looked over to my mom. She was super stone cold. And so, okay, all right, we've been here before, apparently. So my mom went on to say, okay, well, express to us how you're using the yacht for business. And she said, well, I use the yacht as a real estate agent. I speak on the TV show $1 Million Listens, and I do broker previews on my yacht. This is where I bring all these real estate brokers, and we go over different deals on my boat. I also have different actors and athletes who I take out on my boat here in Orange County. I take out celebrities like Shaq and Kobe Bryant onto my boat, and these are the people who I sell houses to. I have made transactions this year just because I brought them onto my boat. As I'm hearing this, I'm like, who is this woman? I'm like, whoa, Kobe. Like, mentally, that's where the dude inside of me went. My mom was like, tax code. I was like, whoa, basketball. Awesome. And my mom went on to ask this question, which was, do you have documentation? She immediately started off with her iPhone photos. And we're like, okay, yeah, that's great. You have photos of people that are on and off your yacht. But what documentation do you have of you making transactions directly after people coming on and off your boat, or like people that we knew actually made it onto your boat at a specific time? And she's like, oh, my captain has a log booklet, and he documents in chronological order the date, the time, the activity of everything we're doing on the boat, and who we were with. We said, perfect. Can we get that? And she's like, absolutely. We asked her to send the photos, that log booklet, and her transactions that she closed that year. We went into a field audit. Field audit is where we invite the IRS to our office. IRS was on the 4th floor. We were on the 3rd floor, so it wasn't a big deal.
Okay.
They come down. We handle the IRS audit inside of our office, and we open up with, our customer has purchased this vehicle, which we believe should be a business vessel, underneath her tax returns, underneath code section 162A, that states a business owner can take a business deduction if the business deduction is ordinary to the business owner, necessary to the business owner, and reasonable to the business owner in the pursuit of income. This was an ordinary expense for our business owner. She's a 7-figure earner, a reasonable expense for our business owner. She's a 7-figure earner. And we also were able to show you that she has documentation and substantiation of every single person that's come on and off her boat. You'll notice here, one of them's a Lakers star down in Southern California. That's Kobe Bryant. This is Shaquille O'Neal. Here are the transactions that she's been able to do. Here's her log booklet logging every single person that's come on and off of her boat. This is deductible under Code Section 162A as a business vehicle. And the guy was like, she knows Kobe and Shaq. The dude came out of there and I was like, yes, the IRS is normal. They're normal. They watch sports. I knew it. And that changed everything for me. I was like, okay, one, documentation is absolutely everything to getting out of an audit. Like it's everything. She was so well documented because she had a team of people that were surrounding her.
Yeah.
Like she had a captain, she had an assistant. Someone was logging her receipts for her. So she had a team of people that was surrounded by her. But most importantly, we knew the tax code when we went in there. We weren't shooting like we were trying to get over on the IRS. We showed that she was making legitimate money by having this business vessel. So it worked out.
That's so good. That's so good. So people are hearing this and maybe they're not in the phase of life where they are having a yacht and they need to write it off.
Yeah.
One of the things is we talk about on this show, quick action, like what's something that they can do to start getting their business in shape so that they could work with you if they're not at that state right there. Yeah. So if someone's making, and I'm going to increase the monetary amount. If somebody's making $10K a month, what's one thing they should stop doing immediately?
Stop doing your bookkeeping. Right around 10K a month is where you're probably hiring a bookkeeper. You probably had your Excel document and you were categorizing your own expenses to try to cut costs to grow your business. But now you're about a 6-figure earner and you probably have somewhere around a 40 to 60% profit margin. So you probably need to have a bookkeeper on your team now. That's
good. Now, when somebody's making 100K a month, what should they stop doing?
You should stop relying on your CPA to come up with strategies to reduce your tax bill because now you're almost pretty much a 7-figure earner at 100K a month. You are doing tax preparation and you're probably paying in estimated tax payments. You're probably maxing out your 401k. You're probably already an S-corporation. You're probably already taking payroll and you're scratching your head wondering why you're still owing every single year. And it's because you don't have somebody on your team that's solely focused on strategy. You've only hired a CPA that's filing your returns.
And for somebody who's making $1 million a month?
If you're making $1 million a month, what you need to look at is how can you do income shifting strategies? How can I take income off of my tax returns and putting it into tax deferred vehicles? One of the things that I love looking at also is how can I invest my money that's going to create active losses on the return? For most of our clients, they invest into movie films, which can give them a 4x deduction. It makes them an active investor in the movie film. We have clients that also will invest into oil and gas. If you invest into oil and gas as an active participant in a working interest, you can claim active losses. Some of our clients are receiving a 90% deduction relative to their investment, meaning if you put in $100,000, you're looking at a $90,000 tax loss in year one. That's a cash flow producing asset that you're acquiring right there. And then outside of that, I love the idea of having a foundation at this amount. If you're making $1 million a month, chances are you've thought about it. If you haven't already, you're philanthropic. Why not write a check to your own private family foundation? The IRS gives you a 30% deduction based on your AGI, and only 5% of the charitable assets that you put inside your foundation has to be donated out to another 501c3 other than your own.
I felt like I was watching like A Beautiful Mind over here, and he's just sitting there and he's just like spitting it off. Here it is. Here it is. Here it is. Yes. One thing that I love hearing you talk about is having your children involved in your business.
Love that.
Can you explain a little bit more about that?
There's two different ways in which we can have your children involved in your business. We can set up a FMC, which is a family management company, or we can set up a rental management company. Let's just say that you're running a real estate operation. Great. What if you decided to set up an LLC management company where you're managing your own investment properties? Now you can get paid for managing your own real estate. But rather than moving money from the left hand to the right hand, you instead choose to work with your children. Children are the perfect employees to have working inside of a real estate management company. Take them with you in the car when you're going to go check out the property. Make them
Is there an age? Like my daughter is 5.
Oh, 5 years old is the perfect age. I would say right around 5 years old is where we start placing children on payroll. It's a perfect age to start placing children on payroll because normally they'll end up being either child models or they'll help mom out with picking up staples off the ground, trash, basic things. And we're going to pay them a wage relative to their age. We're not going to max out the standard
6-figure.
Yeah, we're not going to max out the standard deduction with them. But, it's awesome knowing that we have options to be able to pay our children without our children needing to file a tax return and without us needing to pay payroll taxes. The mistake that business owners make when they're S-corps is they'll place their children on payroll through an S-corp. This is why I say the family management company might be better. You can set up an LLC that is a family management company to the S-corporation. Now your children can be on payroll inside of an LLC that gets paid to manage the S corporation. Let's just say my S corporation is doing podcasting, but my family helps me run the show part-time. They can get paid outside of my S corporation through a separate LLC. So that way I don't have to pay payroll taxes for placing my children on payroll who are underneath the age of 18. That saves you 7.65%, which is Social Security and Medicare taxes, essentially.
That's incredible.
Yes.
That's incredible. And so when my daughter is getting paid as a 5-year-old, am I making, if I heard it correctly, I want to make sure that she's making less than $15,670?
Yeah, $15,750. You definitely want to make sure she's making under that because I don't know many 5-year-olds that can justify making that much money, but that's the maximum you can pay them without them needing to file a tax return.
Okay. Yeah. Okay. Is there, advice? This is not advice. This is just like, what would that number be? Not legal advice. It just depends on what the role is. So let's just say that you have your daughter doing modeling for you and she appears on the website and you bill this modeling shoot per hour at $100 per hour. And she does this 3 to 5 times a month. That might be up to $1,500 a month over a 12-month period. You can start to kind of max out how much you want to pay her in that sense. I got it. Okay. That's really cool. Thank you. That's amazing. Yeah. And then from an not legal advice perspective, that money that she gets paid, what would be the best way for us to invest that? Okay, great. So what I would highly recommend all parents do is to take advantage of the custodial Roth IRA. Because once you've paid your children, let's just say you max out the $15,000, you can take $6,000 of the dollars that no one paid taxes on and put it into a custodial Roth IRA. At the age of 5, if your children do not touch it, and you only do this once, by the way, at the age of 5, if your children does not touch that Roth IRA account, by the time they're 65, they should have about $1.4 million if all of that money is invested into the S&P 500 with an 8% rate of return. Made your children a millionaire tax-free by making one move in 1 year. That's incredible. Pretty awesome. That's incredible. That's incredible. And, I just have to take a second. This was totally not a part of the notes, but when I hear you talk about that way, I can't help but think I'm the daughter of an immigrant. And so the first my family to go to college, first my family to start a business. And I think to myself, the things that we've done and then the people that I get to meet gets to change like massive legacy. Yeah, 100%. And I've never, ever saw it or ever considered it. So thank you. Yeah. Like, that's cool. That's cool. Like, her mama gets to make her a millionaire. That's amazing. Yeah. Okay. So, and it's not just about the transfer of money. It's about the transfer of information, because what did mama learn along the way that got you that $1 million that's in the Roth IRA? Because mama's going to spend time making sure that real wealth is the transfer of information and how I teach you how to build a legacy for your family. So. Do you have children? I do. I have a daughter. Oh, how old is she? She is 13 months. Oh my gosh. Yeah. Oh, she's a baby. Fresh. Super fresh. Isn't it the best? Isn't it? Like, are you just obsessed? We just got back from Europe with her, and it was the best idea to take her to Europe for her first birthday. We're traveling for her first birthday, and it was so awesome. That's amazing. Yeah. What are you going to do to set your children up for wealth proficiency? Yeah. So what I'm doing right now is I set up a life insurance policy with a cash value component to it. So I'm currently paying into life insurance for my daughter. She has a 529 plan. Part of the reason why is because I believe in college and I do want her to go to college and have access to funds for college. But what I love about the 529 plan now that just got updated this past year is whatever funds that aren't utilized in the 529 plan can be rolled over into that Roth IRA account that I set up for her. My daughter will be on payroll starting next year. I'm going to take the year off and strategically map out how she's going to be on payroll. You're such a slacker. She's only going to be 2. Come on, bro. Step it up, bro. I'll have her on payroll right around 2. And that's where it'll start. That's where the journey will start for her. And my biggest thing is I just want to buy 1 property a year that I can have for her. So far, I'm up to 2 so far for her. So we'll just keep that going. Hopefully by the time she's 18 years old, I'll have north of 18 properties for her. So some of the lessons that your mom taught you, what are you passing on and what do you think you would reserve? I would say the lessons that I'm passing on almost have entirely to do with how I act. My mom taught me a lot about respect, honesty, being a good person, not cutting corners, working in ethics. And those are the principles I want to pass on. I absolutely know that my daughter is going to absorb all this tax information being next to a tax wizard like me. And, I want her to gravitate towards her own passions, but I'm going to pass on the information that I know about strategy, because it's not about tax strategy. It's about being savvy in all phases of life. And whether it's having a strategy with your fitness,
having a strategy with your finances, having a strategy on how you're going to get out of debt if something happens. I want to be able to teach her how to strategize and how to recognize patterns. And I think that's what's helped me find success at an early age, and part of the reason why I'm finding success right now.
How do you teach strategy?
Time with people, recognizing patterns, pattern recognition, understanding that it's more about critical thinking than having a fast solution. Yeah.
Okay, not part of my notes. I consider myself a strategist. It's the world that I live and dwell. I actually never really considered that I could teach strategy. Like, I'm just like, well, it is of me. I can't help it. Like, it's just what I do. And so you linked pattern recognition and strategy. Can you connect the two for me?
Well, see, what I look at is I look at successful people and I try to study and mimic some of the things that they're doing.
Okay.
And then I try to come up with strategies on how I can utilize this in my day-to-day life. And so for me, I have a strategy around how I approach my mornings. I have a strategy around how I approach taxes. I have a strategy around how I approach wealth building. But it's not something that I just came up with one day. It's from doing due diligence and recognizing what has worked. I think I have an unfair advantage because I get to see into the tax returns of everybody. So I get to see the real noble. And you see all these people who share these ideas and tell you to do all these things. And then you look behind the curtains and you look at their finances and things can be in entire disarray. And so I have been able to recognize patterns of people who walk the walk and are capable of talking the talk, and people who simply just talk.
Oh, that's real. And you know what? It isn't until you just laid it out like that I'm like, that's what I do. Like 100, 100. Okay, can we talk about your strategy about content? Because now we talked about like I like the word tax wizard. I'm only going to see Karlton and just like, there goes the tax wizard, going down PCH. Okay, but let's talk about, you're a business owner. You're an entrepreneur. And you're an entrepreneur who knows taxes. Okay, great. What is your strategy when it comes to content? Because you're probably just as much of a content wizard as you are a tax wizard. Can we talk about that?
Yeah, I mean, my strategy on how I grew my content was very simple. What are people searching for? And get out in front of it. YouTube is a search engine. It is owned by Google. There are an absence of tax accountants and tax professionals that realize that if you put out content, your video will come up first. They just don't understand this. So in 2020, when I went on the internet and I researched, how do you pay yourself as an LLC? There's only 3 videos on it. How do you place your children on payroll? There's no videos on it. Okay. When you switch from an LLC to an S-corp, there's 2 videos on it that has over 100,000 views. Where is the YouTube person teaching taxes? There's YouTube for everything. If I want to cook an omelet, there's 1,100 omelet videos. Where is the 1,100 LLC to S-corp videos? So I went on GoogleTrends.com. I found out that GoogleTrends.com tells you exactly what people are Google searching. So if I type in how to pay myself as an LLC, I can see over the last month how many people have researched how to pay myself as an LLC. So this is exactly what I did. I went on the internet and I looked up what are people searching the most in tax, and I created videos on that first. The algorithm of YouTube loved it and picked it up. Within 3 months of me being on YouTube, I already had 100,000 subscribers on YouTube in 3 months because I was doing what YouTube wanted me to do. I was solving a problem. And then I just went on YouTube and I said, okay, where else is all the real estate and tax? Because now I'm not viewing YouTube as just a search engine. I'm viewing it as real estate, as digital real estate. And I need to take up all of the digital real estate. So if someone looks up how to place their children on payroll, I need a video for it. Someone looks up how to convert a traditional IRA to a Roth IRA, I need to have a video for it. If someone looks up how do you save money on $100,000 worth of income, I need to have a video for it. So I went and created videos on everything tax related. So now, anytime anybody searches anything in the tax space, Karlton Dennis has a video for it. I took up all of the real estate. This is how I built my business so quickly, is because I bought up all the real estate. And then I turned around and monetized it and said, hey, by the way, come here to Tax Alchemy. I gave away all the strategies. I gave away all the information. And the traditional CPA, they found value in gatekeeping information.
Right.
Oh, pay me this fee and we'll be able to figure this out for you. Pay me this fee and we'll figure out how to reduce your tax bill. What? Give them the information and let them choose on who they want to work with. Who can explain it the best? Who do you gel well with? And so I leaned in hard on that.
And so Tax Alchemy, talk about the business structure of it.
Yeah.
Like now we're talking about the entrepreneur side of what it is you do. You had to scale you. So you became the magnet.
Yeah.
And then you had to disseminate. What does your team size look like? What is the structure? How are you spending most of your time?
Yeah. So early on, I was spending a lot of my time doing all the fulfillment inside of Tax Alchemy. I was the YouTube guy. I was the marketer. I was the salesperson. I was the fulfillment. And
how long did you do that?
It was a lot. I did it for about 1.5 years, 2 years.
Okay. Wow.
Yeah. It was all right. But Tax Alchemy started off with a program. We created a real estate program because I loved real estate and teaching people how to invest in real estate to offset W-2 and 1099 income. Robert Kiyosaki was a big influence on me, and so was Grant Cardone. So I really gravitated towards real estate investing in the tax code. I wanted more people to know how they can invest in real estate to offset their taxes. So I started off with a program. Hundreds of people bought that program. Then they said, Karlton, how do we work with you? Not just your mother's firm. We want to work with you. We've spoken to them. They say we can't work with you. How do we work with you? That's when I decided to create my private client group.
So was this a course?
Yeah, it started out as a course. Tax Alchemy started out as a real estate course.
And then out. How much was it?
It was $2,000. Yep.
Get out.
Yeah. We have over 3,000 people inside the program.
Okay. So the course led to people wanting to work with you.
Yeah.
And so then
but I had no way for them to cash flow me outside of the course. I was like, you're going to get on the phone with my sales team at my mom's office and work with my mom's company.
Yeah.
Well, you can't work with Karlton Dennis. I'm just doing tax education and tax strategy. Even though I have a tax license, I'm still not the one who's doing the tax strategy right now.
Okay.
It wasn't until I built my own department, my private client group department, that I said, okay, I'm going to be the one that actually does the tax plan now. I will get on the call and actually explain it to you now.
Okay.
And this was brand new. And I charged a lot of money for it because I knew now all of the strategies that I could leverage for somebody. And I knew how to use the software and I knew how to explain it and implement it because I was doing it myself on my own tax return.
You were like expert level wizard.
I was feeling pretty good about myself. I was feeling pretty good. So I started selling people tax planning through my business, Tax Alchemy, because my mother's company primarily worked with thousands of clients and I was just going to work with a handful of clients. I was like, I'm just going to work with a boutique, small amount of clients and make it only high net worth individuals. They have to be making over $500,000 a year because I want to make sure they're leveraging the real estate strategies. They need to have liquidity to do real estate. And that's what birthed. I started getting investors to work with me and they started buying real estate and I started doing the cost segregation study strategy and the business grew from, 10 clients to or close to about 1,000 clients now.
And what about the team? How have you grown that?
The team, we went from me having an assistant and 1 tax pro to now I have 25 tax professionals and a staff of about 46 individuals.
And so where do you spend most of your workday? How do you spend it?
I spend most of my workday doing content. So I will wake up. My assistant probably will send me my schedule for the day. She's already responded to the text messages I don't want to respond to and responded to the emails that I don't want to respond to. I'll typically map out the content that I feel like doing for the day and then jump right into it with my team. My team will show up to my house or I'll show up to my studio. We're typically filming for 6 to 8 hours and normally doing YouTube videos, short form content, podcasts.
How many days a week?
Just twice. 2 days a week. I do that 2 days a week.
And then the other 3 days?
Meeting Wednesdays, Thursdays is my family day, and then Fridays I'll do meetings again. Half day.
And so do you have an operator?
Yeah, I'm COO.
And that they leave you in your zone of genius.
Mm-hmm.
And that's content.
Content.
And you're still the magnet attracting deal flow.
Deal flow. Yeah.
Wow. Yeah. And so how many direct reports do you have?
People who report to me.
Mm-hmm.
I have an operations manager. I have a president. I have my film and production manager. I'd say 3, and then my HR manager. So yes, 3 or 4 people.
Wow.
Yeah.
And so in terms of content, I did have a question, and we can edit it out if you're not comfortable talking about it.
Yeah.
The School of Hard Knocks, they came up to you in a street and they said, you didn't pay any taxes.
Yeah, they found me in Beverly Hills.
So I've always thought, is this planted?
Yeah. They come up to people.
So you were
they're now scripted.
Okay.
They're now scripted.
Okay.
Yeah, because I know James. So now I do content with him. So I've been on his podcast show. He's unscripted most of the time. He'll just go up to you.
Okay, so explain the story.
So I pulled up. I was shopping. I was going to the Go Yard store, which is in Beverly Hills. It's the only Go Yard store in California. So I was going there. And I pulled up in my drop top Ferrari. I don't have that Ferrari anymore. I've sold it for a nicer car, but I love that Ferrari. I miss it.
It's so lowbrow. Drop top Ferrari. Come on, Karlton, step it up a little.
Love that car, but I had to part ways with it. So I pulled up in this white Ferrari, drop top, red interior, looking like a straight chocolate drop. I was ready to go. And then he comes up to me and he shoves a microphone in my face. So I immediately was like, who the hell is this? Am I going to have to fight somebody right here in Beverly Hills? LA's a little crazy. And he's like, excuse me, sir, can I interview you? And I was like, yeah. And I know LA has a lot of those young guys that like to interview people. And I'm a internet personality. So I'm like, okay, I'll do an interview. He's like, can I ask you what do you do to be able to afford a Ferrari like this? And I'm like, oh, easy. I was like, I run a tax consulting company. And he's like, okay. And how do you help people? I was like, I help people legally pay 0% income taxes. And then he asked me how much money I had made. And he's like, okay, do you pay any taxes? And I was like, no, I don't pay any taxes. And I think it's more patriotic to not pay taxes. And so that went viral. I guess a lot of people kind of, had affinity to that. And yeah,
it definitely went viral.
It definitely blew up our brand too a year or two ago.
Incredible.
Yeah.
And then they came back. So I actually thought it was scripted.
Really?
Oh yeah, 100. Because I was like, it just looked too perfect. It looked like, excuse me, sir, can I interview you? And you're sitting in your car and you didn't seem like you were caught off guard. You're like, hey, I guess like a chocolate drop indeed. Yeah. And so I was like, oh yeah, it's got to be this. And then they came back to your house and did an interview.
Yeah.
A long form podcast.
Yeah, the year later they did a long form interview.
Okay. Did you get any heat for people saying, oh, he didn't pay any taxes?
No, honestly, that was my best year of business. To be completely honest with you.
So you don't get any people saying it's when people say when you said it's patriotic not to pay taxes.
Yeah.
Aren't there people who argue the opposite?
I mean, there are, but I don't believe those people have the right education, to be honest with you.
Okay, explain it.
If you look at how the tax system was built, I mean, we didn't live off of taxes in the United States. In 1913 was when we introduced a formal tax system. Before then, we lived off of excise taxes. We used to tax tobacco and alcohol. That was it. And we thrived. We were doing completely fine. Then we had World War I. And then the government said, okay, we're just going to take taxes out of your paychecks temporarily. Well, guess what? That temporary document got signed into law and then it became permanent. Now you have a permanent way of taking taxes out of our paychecks. And then the IRS got created a year later and it just kept going. It just became this permanent thing.
And so it's patriotic in that we go back to the roots of our founding fathers.
Our founding fathers never wanted us to be taxed. You had a Boston Tea Party where people were literally throwing mounds of tea into the ocean over 1% tax. We're at 37% now. We're at 37% now. So, yeah, I think it's more patriotic to not pay taxes. I think it's more patriotic to use the tax code to not pay taxes. And I think those who set the tax system up to tax the most earned income earners and to reward those who invest the most amount of money.
Mm.
Yeah.
I love that answer.
Yeah.
And I love that you are here and sharing this wisdom and knowledge. I have spent endless hours consuming your content, a lot of which I understood and a lot of which I didn't. And the more I listened to it, the more accustomed I got to the language. It made me feel a lot more powerful. Yeah. I knew what I wanted to do and I set goals that I had never set before. And so I felt challenged by your work to take a lot more ownership in what I'm doing to catalog, to diversify how we are setting ourselves up for the future, and then to bring in our daughter and show her how we can change wealth and set her up for future legacies. And that's why I wanted you on the show. I just wanted you to come in and inspire other people to make those similar decisions. Now, there are a group of people who are more than qualified to become a future client of Tax Alchemy.
Absolutely.
Where can people go to get more information?
Yeah, absolutely. Guys, listen, free education is on our YouTube channel at Karlton Dennis. Check out our YouTube channel first and familiarize yourself with some of our strategies. But if you're ready to, hop on a call and talk to a tax strategy team to formulate strategies that are proactive instead of reactive, go to taxalchemy.com. Be sure to schedule a complimentary consultation. We'd be more than happy to help you.
That's amazing. And let's shout out your YouTube and Instagram and where you're creating content.
Yeah, absolutely. Karlton Dennis on all platforms. You can also visit us at Tax Alchemy Advisors as well. Be happy to help.
You guys, I was looking forward to this interview. I knew that I could throw a game at the beginning of it. I knew that he would be game, and you just came in again and just blew my mind. You added different elements to stories and education that really had a profound difference. So thank you so much.
Absolutely, I appreciate it.
For those of you guys who are watching and listening, thank you for watching and listening to the Jasmine Star Show.